Here are the crypto top headlines covered in this video. Wall Street is getting invited to the greatest show on earth with Bitcoin ETFs, says Anthony Pompliano. Next, XRP Army bank on a massive bull run as Analyst foresees Ripple emerging as market leader amid IPO rumors. Also, SEC moves closer to spot Bitcoin ETF approval with 19B-4 amendment filings. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline is an interview with Anthony Pompliano on Thursday, January 4th on CNBC's Squawk Box about Wall Street is getting invited to the greatest show on earth with Bitcoin ETFs.
Traders are on alert as we get closer to the SEC's January 10th deadline to approve spot Bitcoin ETFs. Joining us now with more on the various regulatory outcomes that could impact crypto trades, Anthony Pompliano, founder and partner at Pomp Investment. Anthony, good to see you this morning.
Absolutely. Thanks for having me.
So I have to just dial back. I go back to when the SPY was listed 30 plus years ago. I covered it then. The USO, the oil ETF, the gold trust in 04 and 06. There was never anything like this anticipation. We don't talk about ETF launches and who the authorized participants are. This is bureaucratic back office stuff. That's just how the trades function. So all of which is to say the degree of anticipation of this and how it's made its way into the market is extreme. How is it not just a anticlimax when it happens?
Wall Street is getting invited in anticipation of the greatest show on earth. Right? Bitcoin has been the best performing asset for the last 15 years, and Wall Street's basically been boxed out of it. They haven't had access to this asset. And so I think that's what you're seeing in that pent up excitement. One thing that I do caution these Wall Street investors is you can't trade this like other assets. We saw just yesterday about $1 billion of open interest got wiped out. The guys over at Reflexivity Research did a fantastic job outlining, saying, this asset in 2021 went up almost 800% from before the pandemic started to the kind of the top of the market.
Yeah.
During that time, there was 30% drawdowns. If you're going to try to get levered long and think that, hey, ETF gets approved and this thing just goes to the moon, you're likely to get shaken out or get liquidated.
That is really good advice. Just beware the volatility that comes.
This thing is on a risk-return basis, it's by far the most attractive asset in all the financial markets, but it comes with tons and tons of volatility. And so if you go back to 2017, it was $1,000. We're up 45x since 2017. But along the way, we've had two 80% drawdowns, a plethora. I can't even count how many, 30+% drawdowns. And so Wall Street is saying, hey, the ETF's coming. Here we go. Now, I do think over a long period of time, Bitcoin's price is going to continue to go up. We're going to have a persistent bid from all these ETFs. Another thing people aren't talking about, everyone's talking about the primary fund flows. So retail or institutions buying this ETF. But actually what we're starting to see now is other publicly listed funds or ETFs are changing their prospectus to say that they can put up to 15% of their AUM in the Bitcoin ETF. So if you have the best performing asset and you got an ETF that's lagging, why would you not put Bitcoin in your ETF?
But all of this really formalizes the greater fool aspect of why Bitcoin should go up, right? It's just there are more people who are going to get in there and buy, and they have a new easy way to do it. Meanwhile, it's easier to own Bitcoin directly than it was to own a barrel of oil or a gold bar or a futures contract. When those things were introduced, it didn't change the overall price curve.
I think there's 2 points that you're making. First is when you buy this ETF, you are not buying Bitcoin. You are buying exposure to Bitcoin. But if you want to actually own Bitcoin, take self-custody, you should definitely go do that and not do it through the ETF. The second thing, though, is this kind of greater fool theory. One thing I always say to people is, what is the most valuable commodity in the world? In my opinion, it's computing power. Bitcoin is the strongest computer network in the world. And so when you're buying Bitcoin, you're buying an asset that is backed by the strongest commodity in the world. So when you start to think of it from that perspective, yes, it is internet native. Yes, it is for this kind of digital generation. But those people don't look at oil or gold or anything else as the most valuable commodity. They look at computing power, and that's why Bitcoin is so attractive to them.
Can I ask you a very simple question? If I own Bitcoin through an ETF, do I have greater protection of my ownership of that Bitcoin interest than I did through some of the exchanges where I've heard some nasty stories?
So you definitely have the exposure, and obviously it's a regulated entity. You have the ETF structure, all of the things that I think Wall Street really enjoys about the protections of those regulated funds. What you don't have, though, is direct exposure and ownership of Bitcoin itself. So one of the beauties of Bitcoin is similar to cash. You can go to the ATM, you can take the cash out of the machine. With Bitcoin, you can actually take self-custody. You can own it. You don't have to rely on any counterparty. You don't have to rely on an exchange. You don't have to rely on an ETF provider, et cetera. And so people have to ask themselves, what is my comfort level? Am I comfortable taking self-custody, or do I just want the financial exposure and I don't want to deal with that? And I think that that's where you're going to see a lot of people who have been sitting on the sidelines. Institutions, they can't take self-custody. They need the ETF to be able to actually allocate to the asset.
Hey, Anthony, the CoinDesk, The Block, a lot of different places are reporting on this Matrix Port report from an analyst who says that the SEC is going to say, forget it, they're going to reject the ETF, the spot Bitcoin ETF proposal. I know you think that's a real long shot. What would happen if they actually did do that, if the SEC said no?
If they approve it, I think that there will be a lot of short-term volatility, and then we'll kind of get right back on track, whether it goes up or down after the approval. If they reject it, I think the same thing would happen. There would be a lot of kind of short-term volatility, and we'd get right back on track. The beauty is with Bitcoin, if we go back, we saw something like this. China had over 60% of all mining inside of their borders. They completely banned mining and kicked them all out. 50% of the hash rate went offline. By the end of that year, May of 2021 is when it happened. By the end of 2021, mining hash rate was back to an all-time high. And so this thing is just resilient, it's anti-fragile, and it continues to just do what it was designed to do.
But that's true, although the risk reward, you know, the returns based per unit of volatility you cite, it really depends on the starting point. Right? I mean, 2.5 years ago, you were here, you were saying $100,000 really soon, we're going to get there on Bitcoin, and it's been nothing through this inflationary spike and a Fed tightening cycle.
I always say, look, at $8,000, right? I thought I was going to 100. It only went to 70. I was off by a little bit, right? But in terms of, I think these directional moves, again, it goes back to there is a lot of volatility here. Yeah. And I do think that the volatility will dampen as obviously ETFs and kind of more persistent sticky holders come into the market. But remember, we aren't just talking about an ETF either. We also have the halving that's coming up at the beginning of Q2, and we've got to return back to loose monetary policy. And so I think that we're going to see a pretty significant move in Bitcoin. Just don't expect it to go from 45,000 to 1 million tomorrow.
Right.
Our next top headline, XRP Army bank on a massive bull run as analyst foresees Ripple emerging as market leader amid IPO rumors. Linda P. Jones, a renowned wealth mentor and pro-Ripple investor, has expressed her optimistic outlook on Ripple, the firm behind the XRP cryptocurrency. In a recent interview hosted by Link2, a leading private equity platform, Jones emphasized the importance of identifying future market leaders and identifying the blockchain company as a standout contender among the best. Anytime I look at investing in stocks, I want to know who's going to have the number one or number two company in the space. Ripple is the most exciting investment opportunity and largest investment opportunity that you can usually think of, said Jones. The pundit highlighted Ripple's focus on cross-border payments and involved in helping governments form central bank digital currencies as key factors contributing to its potential market leadership. She further emphasized the pivotal importance of Ripple's robust management team, highlighting how the team plays a critical role in the company's overall success. I think looking at who's the market leader, looking at the quality of management that Ripple has, of course, Brad Garlinghouse, Chris Larson, David Schwartz, I mean, just an all-star team right there. And it just continues with their board of directors. I mean, it can't get any better than that, she stated. Jones also praised Ripple's utility in providing savings to companies, both in time and money, through the XRP ledger. She noted the advanced technology and innovation that Ripple brings to the table, describing it as disruptive to traditional banking and financial services. Notably, the XRP ledger, or XRPL, concluded 2023 with a remarkable surge, recording an all-time high of 6.8 million daily transactions on December 30th. This substantial increase from the previous record in November of 21 emphasizes XRPL's growing significance in facilitating a burgeoning ecosystem of transactions. Furthermore, Jones highlighted the broader trend in the industry, stating, "We are moving from having digitized communications back in the 90s to digitizing commerce and currency." She emphasized that this shift represents a colossal opportunity for wealth creation, surpassing the impact of the Internet. In a tweet today, she affirmed her assertions, writing on X, "We are still in the first inning. Digitizing commerce is a much bigger opportunity than digitizing communications. The Internet was." It shall be recalled that in November, Jones hinted at a potential IPO for Ripple. While Ripple has not officially declared its intention to go public, Jones expressed belief that investor pressure may lead the company in that direction by mid-May 2024. Our next top headline, SEC moves closer to spot Bitcoin ETF approval with 19B-4 amendment filings. As the week draws to a close, 11 spot Bitcoin ETF applicants have submitted 19B-4 amendment forms, with the deadline for the U.S. SEC to approve or deny the product just days away. The United States Securities and Exchange Commission has begun accepting filings by exchanges in a sign toward approval of listing a spot Bitcoin exchange-traded fund. On January 5th, 19B-4 amendments were filed for spot BTC ETF applications from asset managers BlackRock, Valkyrie, Grayscale, Bitwise, Hashdex, ARK 21 Shares, Invesco Galaxy, Fidelity, Franklin Templeton, Van Eck, and WisdomTree. The filings are one of the last stages in the SEC approval process, but S1 documents must be completed in order for U.S. exchanges to begin listing shares of investment securities with direct exposure to crypto. Some experts have speculated that final approval for the spot Bitcoin ETFs will drop before January 10th, the deadline for an offering from ARK Invest and 21 Shares. A potential approval could mean greater adoption of crypto in the U.S. and worldwide. Meanwhile, in a post on X, Bloomberg ETF analyst Eric Balchanis showed optimism that the SEC would approve a Bitcoin ETF by the start of next week. Yeah, it's basically done. Latest I'm hearing from multiple sources that final S1s are due 8 a.m. on Monday, as SEC is trying to line everyone up for January 11th launch. However, U.S. financial advisors as a whole are not as confident that the SEC will approve the offering. On January 4th, Cointelegraph reported that only 39% of U.S.-based financial advisors believe a Bitcoin ETF will be approved this year. In a survey from ETF issuer Bitwise, financial advisors across the country were asked several questions, with participants ranging from registered investment advisors, financial planners, institutional investors, and wirehouse representatives. When participants were asked to select a time period for when they expect a spot Bitcoin ETF to be approved, only 39% answered 2024. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.